Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, David Smith of the Morgan Report and MoneyMetals.com columnist joins me to discuss the dearth of exploration that's taking place in the silver mining industry and what that might mean for the supply of physical silver during the coming mania phase of retail buying he says will one day be upon us. David also offers some advice and a warning to those who are suffering from the widespread investor complacency we're experiencing in today's markets. So don't miss another fantastic interview with our good friend David Smith coming up after this week's market update. As gold prices firmed on Thursday, the U.S. Senate weighed the issue of pegging the currency to a gold standard. Not surprisingly, the mere mention of gold ruffled the feathers of some senators. More on that in a bit. But first, let's review this week's price action in the precious metals markets. As of this Friday morning recording, gold prices check in at $1,583 per ounce, 0.7% higher for the week. Silver is essentially unchanged on the week to trade at $17.79 an ounce. Platinum is off a slight 0.4% since last Friday's close to trade at $967. And finally, palladium is putting in a weekly advance of $99 or 4.2% to trade at $2,430 per ounce. The metals have had to contend with a rising U.S. dollar versus foreign currencies, a familiar story. The dollar index has risen steadily since the beginning of the year and got an added boost from fears over the China virus outbreak. The USDX is now close to taking out its 2019 high, although it may be getting overbought near term. We have already seen some major commodities, including copper and crude oil, come off their coronavirus lows. A reversal in the dollar would likely add fuel to a recovery rally in raw materials. Since economically sensitive commodities got hit much harder than precious metals, they would also likely snap back more strongly, at least until they work off their oversold condition. Meanwhile, gold continues to serve its function as a core safe haven, holding quite well. It is stair-stepped modestly higher this year. While succumbing to some selling at the beginning of the month, gold has been far less volatile than other assets. Gold remains the ultimate money, as former Federal Reserve Chairman Alan Greenspan has acknowledged. And President Trump's nominee to an open seat on the Fed Board of Governors would perhaps help revive gold's standing in the monetary system. But first, she has to win approval by the U.S. Senate. Prospective Fed policymaker Judy Shelton faced a difficult task in trying to explain her unconventional views to senators who are steeped in conventional thinking when it comes to monetary policy. A sore spot for many of her Senate interrogators was Shelton's history of supporting a gold standard. Reacting on both sides of the aisle ranged from confusion to concern to hostility. On the Democrat side, Senators Sherrod Brown and John Tester led the attacks on Judy Shelton.
Ms. Shelton is not a conservative. She's far outside the mainstream. She's off the ideological spectrum. For 3 decades, Ms. Shelton has been a prominent advocate for returning to the gold standard. In making the case for Ms. Shelton's nomination, her friend James Grant wrote in the Wall Street Journal, with the nomination of Judy Shelton to the Fed, the discussion is tilted to gold. Gold is money or a legacy form of money, Ms. Shelton contends, and the gold standard is a reputable, even superior form of monetary organization.
The gold standard, also in the Wall Street Journal, let's return to the gold standard. And you hope that Vice President Pence would hasten return to the gold standard. You talked about a new Bretton Woods be held in Mar-a-Lago. If that isn't advocating for returning to the gold standard, I mean, what is?
The American dollar is the world's reserve currency. It should stay that way. We want it that way. We agree that it should be that way, and we're proud of it.
On the Republican side, Shelton has the support of Senate Banking Committee Chairman Mike Crapo, but at least 2 Republicans appear reluctant to support someone with ties to sound money principles.
At least 2 Republican senators say that they are still on the fence over whether to support her nomination. One of them is Republican Senator Pat Toomey of Pennsylvania, who was worried that her views on currency wars could be dangerous.
I remain concerned that she is an advocate for using monetary policy to devalue the dollar.
And the other one is Senator Richard Shelby of Alabama, who said that her views on issues like the gold standard make her an outlier. You said you were troubled by some of her writings. Do you remain troubled?
Concerned.
Now, if either of these two senators vote against her, that would sink her nomination in committee. So she does have the support of the chairman, Mike Crapo, who said that she is highly qualified to serve.
Even if Shelton manages to get confirmed, she would only be one voice on a 7-member board. And while she hasn't disavowed her past support of gold, she has more recently come out in favor of lower interest rates and a weaker dollar, in line with President Trump's priorities. The Fed will probably never enact any restraint on itself when it comes to its abilities to create currency out of thin air, whether it's gold or gold and silver, as the Constitution prescribes, or a basket of commodities, as some monetary reformers have proposed. Trying to impose any kind of objective currency standard to tie the hands of central bankers is bound to fail. The problem is the central banking system itself. As long as interest rates and inflation targets are centrally planned, the central planners will prevent true market discovery and innovation from taking place as they rig prices and prop up malinvestment within the, quote, too-big-to-fail banking system. Sound money advocates don't necessarily believe that gold and silver are the only viable alternatives to fiat money, but the precious metals would likely play a significant role in any true free market monetary system where the confidence of currency holders must be earned. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome back David Smith, senior analyst at the Morgan Report and regular contributor to MoneyMetals.com. David, it's good to talk to you as always, and how are you, my friend?
I'm just fine, and it's great to be back, Mike.
Yeah, well, it's been a handful of months since we had you on, and I've got a lot of topics to discuss today, so we'll get right into it. Now, to start out, here we are about a month and a half into the new year. Metals prices perked up in December, but haven't really done much since that first week in January when it looked like we were about to head to war with Iran, which was a short-lived crisis, thankfully. But in our view, markets are incredibly complacent, David. Stock prices just keep moving higher and higher. Nobody seems to be worried about risk. This despite there being plenty of reason for concern. To name a few, we've got a virus outbreak. There continues to be extraordinary activity in the repo markets. Officials still haven't really bothered to explain what's going on there. And Brexit is finally happening. Maybe we're missing something, but it really feels like markets ignore all this stuff completely. A decade ago, the Fed pumping hundreds of billions into the repo markets would have been a major market-shaking story. Meanwhile, one of the EU's largest economies having exited the trade union, raising questions about whether the EU can survive. A story like that would have been making serious waves. But the life cycle of these sorts of stories just keeps getting shorter and shorter. We're to the point now where the impact of a major geopolitical event can be measured in hours, if there is any impact at all. So what do you make of the complacency in markets?
Well, Mike, I agree with everything you just said, and it's really amazing that no matter how big an item is, people just slough it off. They seem to feel that the central banks have their back almost no matter what, and that they can, if you have an 800-point drop in the Dow over 2 days, why the Fed's going to come in and step in and pump it right back up again. Of course, that's what they've been doing, but to make that your strategy, I think, is really pretty dangerous. And it works all the time except for the last time, and then you get wiped out. So I really think it's worth being cautious and not only that, but in terms of buying metals, thinking, I'll wait until it does something. Well, it's time to do it when it's quiet. That's when you want to be involved, not when you're competing with a bunch of other people.
Yeah, certainly good advice. It's going to happen in the blink of an eye, most likely when things do finally go off a cliff. And hopefully we don't see that, but it does seem like it is inevitable based on all the debt in the system and all these unintended consequences of all the money printing for well over a decade now, of course, going back beyond that. But certainly the massive spike we've seen since the great financial crisis and the central bank's response since then. How about the coronavirus, David? How might gold fare in an event that the pandemic either continues to build, and then how might it fare if it doesn't develop and ends up flaming out?
Well, the demand for gold seems to be there no matter what, whether it's fear or love or both. And I was just reading yesterday where the gold jewelry purchases in China were down because of the coronavirus, but the gold bullion purchases were up. So people are still buying the gold. They're not going to stop buying it just because of what's going on. In fact, you can make an argument that they have more disposable income to buy gold now since they're not traveling as much. So I suspect that's no small factor because that people want to hoard the gold and have more of it. And so I think that's going to be just one more event driver, pushing things forward no matter how quickly this thing gets resolved. And no one can predict it. I mean, I'm not going to try to predict it. It seems like things are better, but and oftentimes these things blow over in a few weeks or a few months. But this could be something that's totally different, and we just don't know. And I think to hang your hat on the fact that it's going to be like all the others as a short-term disrupted in the market, I think that's pretty risky.
Yeah, and certainly we don't really know what to believe when it comes to information coming out of China regarding the pandemic. Who really knows? Maybe it's far worse than we are being told. A lot of people seem to think it is, and others think it's not that big of a deal at this point. I guess time will tell. Ultimately, hopefully it isn't something that spreads to the rest of the globe or here in the States. That would be pretty bad news. Well, silver has obviously been a real laggard in the precious metal space, David, and the gold to silver ratio has stayed in the mid-80s level for a while now. Has silver's underperformance been a cause of concern for you?
Not really. Silver likes to sit around and make people impatient that it would do something. On the charts, it loves to break down through supposed support zones and then turn right around and move up. So I'm not concerned. And when it does decide to go, it can move so quickly that you can't even get a hold of your hat. So people that want to accumulate should be doing it now sensibly, and they shouldn't be trying to pick the exact turn or when it's going to become alive or whatever, because silver is known as a restless metal for more reasons than one. And many, many times people that thought they could figure out what it was going to do and when it was going to do were left standing at the gate. So I would suggest people not get overconfident in that area either.
If we look at last year, actually silver did almost as well as gold. I think silver was up, 14 or 15%. Gold was up about 18%. So that gold-silver ratio didn't widen dramatically. We've just kind of been stuck in that 80s, mid-80s to 1 range. What do you attribute silver being the laggard to, David? Is it this push-pull scenario with it being both an industrial metal and a monetary metal, and the market can't decide what it wants to be? Is that what's going on there?
I really think that is an element in it, and because it is an industrial metal versus an investment vehicle or actually sound money. And the thing is, what really takes to get silver going is an influx of buy orders from the retail space and from people that are accumulating in that regard. I haven't seen a chart like this because I don't think it's possible to design one where you have, for example, there was a build in gold, which X amount of gold has gone into central banks and to ETFs and things like that. But a lot of gold didn't go into any of those things. It went into private hands, which is kind of difficult to figure out where it went. And I think that same thing is going on with silver, but there's no chart to show that. And so some of the biggest funds in the world have stated lately categorically that they feel silver is the most undervalued asymmetric asset that you can buy. And I don't think they're just talking their book. I think they're buying their book. And so they're going about it in ways that you and I can't divine and picking up physical silver, and they're taking away from the supply. And at some point, there'll be a point where that becomes obvious to people what's going on, and that's where you're going to get a big jump in the price. So waiting for that to happen, you could see a $5 move in the price while you're standing there looking at it over a couple of days when it becomes obvious to the market. So I just think it's penny wise, pound foolish to try to wait until you see it and think that you can kind of divine that and get on board in time to even catch a part of that move.
Yeah, I want to get more into supply with you in a moment when I ask you about some of the mining situation there. But first, kind of sticking on the retail side of things, I wanted to dive into some of the recent numbers that we've been seeing from the sovereign mints in terms of bullion sales. What did you make of the recent U.S. mint sales on Silver Eagles, and then comment on some big numbers we saw from Australia's Perth Mint in terms of gold sales over the past couple of months? Talk about the data you're seeing there, David, if you would.
Well, I think the sales of American Silver Eagles in December were paltry, to say the least. I mean, it was just, I think it was like, I don't know whether it was under 100,000 or something like that. And then all of a sudden it was, 3.4 million in January. And it just shows you how quickly those sales can turn on a dime. And so trying to divine that is just impossible. And it seems to me if you just go against the herd when it's low, you buy more, and when it moves up, then you realize, hey, I did the right thing. And the Perth Mint, they were selling enormous amounts of gold in December, and it wasn't just all from one country, but a lot of it was coming from Germany, and I actually wrote about this in the current essay for Money Metals as part of the essay, where the German government had moved down, and I guess it's law now, where if you bought under 10,000 euros worth of gold, you didn't have to report it. But now it's 2,000, and 3 years ago it was 15,000 euros. So they've taken it down by about 90%. You can only buy 1 and a fractional ounces of gold without going through a bunch of paperwork and making sure that everybody in the world knows what you did. And, because you want privacy doesn't mean you're a criminal or you're going to do something illegal. It means that it's not everybody's business what you do. And so now these poor people in Germany, and many of them lined up around the block of these stores, and most of them didn't get any gold. And now they're stuck with, no matter what happens, they can't buy more than about an ounce at a time without doing a bunch of paperwork and getting permission from the government. And you can imagine when gold is several times higher than it is, which I believe will be the case in the next few years, you'll be able to buy a fractional ounce and be under that 2,000 euro limit. So it's sad for them, but it's a rolling idea of government wanting to be more and more in your business, and I see that sort of thing continuing around the globe.
Another reason to get it here while you can, still be under the radar. That's one thing that thankfully we don't have to deal with in the States when it comes to reporting or the government being aware of what it is that you're doing. But who knows? Maybe we get some politicians in there that want to become Big Brother when it comes to all kinds of things in that realm, and maybe that's another reason to be buying it now while you can and do so somewhat anonymously. Well, you follow the precious metals mining sector very closely, obviously, so I wanted to get an update on what's happening there. In general, do you see miners being profitable at these gold and silver prices? I mean, on average, what is the all-in cost of production for an ounce of gold and silver? Obviously, every mine is unique based on the quality of the deposits and lots of other factors, but we're curious about how profitable you think the industry might be, assuming prices stay right about where they are today.
Well, that's a kind of a double-edged question, or I should say there's a way to answer it in several ways. One has to do with how efficient has a particular miner become in the last few years at lowering their costs and keeping labor under control, the expenses and things like that, and having projects that actually do well. A couple of companies that I follow have actually sold their base metal silver projects, and they now are working on gold, silver only. So it takes a lot of money to separate out the lead, zinc, and copper from a silver deposit, and if you have one that's high-grade silver and not so much of the base metals, by definition, your cost of getting that silver out of the ground is going to be lower than if you have to go send them all to the smelter and separate each of the components. So that's one thing. There are a couple of companies that I follow that are using new, more effective methods of silver recovery, and so their cost is down, and they're making money now even at these prices. They'll be practically cash powerhouses but when we see silver above $20. So they've been working really hard to make these things happen. And one company went from a recovery of 65% of their silver to about 95%. And that's an enormous improvement, and that all goes to the bottom line. So companies that are doing a good job in that regard, they're the ones to really watch.
Why are there even fewer primary silver producers than there were a few years ago? And what does this mean for the ability of silver supplies to handle future demand spikes in the investment space, which obviously, as you mentioned, can turn on a dime? And what happens when that comes and there just isn't the supply? Talk about that from the silver mining perspective and the lack of primary silver producers.
Well, sometimes you hear something that really strikes a chord and you kind of knew it, but when you hear somebody that's really got the gravitas, it really strikes home. And last fall at the Silver Summit in San Francisco, I was a moderator on a panel with the 3 different silver companies, one of which was Peter McGaugh of Mag Silver. Dr. McGaugh probably has discovered more silver ounces and more high-quality deposits than anyone else on the globe. He's got just an incredible sense, not only an academic sense, but an intuitive sense about where good silver deposits are found. And he made the comment that, about 75% of the silver comes as a byproduct of copper and base metal production. In fact, the company that I follow in China, a Canadian company that produces silver there, their cost of silver like $5 an ounce to produce, but 40% on an average quarter, 40% of the production is actually lead. So they're a primary silver producer, but an awful lot of the production of metal is lead. Because most of it comes from base metal, we get a big silver spike, and the demand is out there and the supply starts dwindling. There are relatively few. I mean, there are literally a handful with some fingers left over of primary silver producers that are, and they're juniors. They're not 10, 20, 30 million ounce silver producers. They're relatively small, and they're the only ones that can step in to fill that gap. And when things really get going, they're not going to be able to fill that gap. So there's no way that these very few, relatively small companies are going to be able to make a huge difference when that crunch comes. And that's what people should understand. There's no way to ramp it up. It isn't like, you open another copper project and suddenly you got, hundreds of thousands of tons of copper available. It's not like that in silver. And so that is something really to pay attention to, I believe.
Not to mention that it takes a long time to even get mines up and running. There's so many environmental issues, permitting, and so forth, just to bring a mine up to speed to the point where it can even be producing. And I mean, that can take years in many cases, right?
It's not unusual to take 8 or 10 years, even on a small project, raising the money, finding how much silver you have so that you can write an I-43-101 compliant report, and making sure it's feasible. I mean, there have been a couple of cases that I'm aware of where they went ahead, the company went ahead before they had really looked at the feasibility statement, trying to take a shortcut. Sometimes that works, and you save a lot of money. They found out that their project had a fraction of what they thought it had when they started, and they'd built a mill and everything, and they went bankrupt, So it's high risk out there. You've got to know your stuff, and you've got to be lucky, too.
Obviously, with silver kind of beaten down and just grinding sideways for the last 5, 6, 7 years, what has that done to the exploration of these new silver projects? What do you make of that?
Well, it's done the same thing that it's done for gold. It's the majors have put less money into it. They've gotten rid of a lot of their exploration staff, and some of these other people have gone, to a small company to try to do their own thing. And it's just kind of frittered away that resource. And I was just listening to Frank Holmes talk at the VRIC last month in Vancouver, and he said that the cost of finding an ounce of gold, and I have to believe it's somewhat similar for silver, is 2.8 times as much. It costs 2.8 times as much money to find an ounce of gold as it did 10 years ago. And even if it's half that for silver, which I imagine it's probably pretty close to gold, if it costs 1.5 times as much as it did 10 years ago, that's a lot more money to put into finding that ounce of gold or that ounce of silver. When people hold these coins or these bars in their hands, and they should really think about how wonderful it is to have that 999 or 9999, the 49 fine gold or silver in their hands, what it took in terms of money and effort and sweat and toil and time and energy to get that into their hand, and they should really feel privileged to have some.
Yeah, I like that. Very well put. And obviously, we can see what can happen in a supply shortage situation. Rhodium or palladium, those markets have been sort of going parabolic here, and we have a true supply shortage. And in those markets, at least, that actually matters. Well, finally, David, as we begin to close here today, what are some of the key levels in gold and silver that you're going to be looking for, both to the upside and then to the downside? And then assess for us what you think 2020 will hold for the precious metals and what type of year you think it will be as we begin to wrap up here today.
Well, technically, on the upside, you got resistance at 18, 19, and 20, and that could even take a while to get through, or it could just cut through it like a knife through butter, but that will tell you something if it does. I think the real realization is going to start dawning on people when silver gets above 20 and stays there for a few days, and then you've got a band of resistance. You really don't have too much resistance between 20 and 26. And I think it's very possible that by the end of this year, silver will challenge $26. I'm not saying it'll get there or it'll stay there, but that is a huge, huge ceiling of selling supply that was broken some years ago on the downside, and which created the beginning of the run clear down into the low teens for silver. So that will be, once it gets to 26 and gets above that and forms a bit of a platform, the lights are going to start going on around the world that, hey, this is for real. This is not just another bear market rally, and we better get ready for some action here. And then I think you're going to see a fairly quick challenge between 26 and 50. Whether that will happen next year is very possible, certainly early the year after. But I believe we're going to all-time highs in silver over the next few years, and it's going to be in 3 digits eventually. And I think that you referred to the palladium chart a while ago. I think that kind of action is going to be what we'll see some years down the line in silver, where it gets to an elevated level, and people think, well, this is it. It can't go any higher, and it acts like it's a top and all that. And suddenly it breaks through that high, just like palladium did about $1,100. And it's going to go and go and go, and suddenly palladium, what now? Is it about $2,300? Who would have ever believed that would happen? And not only that, but that you could watch it for months at a time, and you could still be selling some of your metal. And I think that same thing is in the silver's future, and I think that the price that it gets during that is going to shock people, and they're going to say, why in the world didn't I buy silver when it was under $20 an ounce? Because I wasn't buying something like a boat or a couch or something like that. I was just trading on the form of inferior money, fiat money, which loses value all the time, for real money, and something that can never go to zero, and it's an industrial metal to boot. And I didn't buy it. I can't believe I didn't do it, or I didn't buy more.
Well put. We'll leave it there for today. Good advice, and couldn't agree more. Well, thanks for the time. As always, David, I always enjoy the conversation, and we'll continue to watch for more of your great articles as they become available at moneymetals.com. And until next time, keep up the good work, and take care, my friend.
Thank you, and I've greatly enjoyed our discussion. Have a great day.
Well, that will do it for this week. Thanks again to David Smith, senior analyst at the Morgan Report and regular columnist for moneymetals.com, and co-author along with David Morgan of the book Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, which is available at moneymetals.com and Amazon. Pick up a copy today. And check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.